Joel, a lot's been made of relative strength in cloud, or at least enterprise demand. But I wonder if you think even that's at risk now if equity asset values and budgets get a harder look going into the second half.
Yeah, good morning. Thanks for having me on. So far, I think one theme of earnings season, at least within tech, has been corporate cloud demand has been robust. We saw it from Microsoft Azure. Google Cloud Unit came in okay. ServiceNow kind of came in ahead of expectations. IBM put in a different print. So I think cloud demand is not going away. You're still going to see workloads continue to shift towards the cloud in the years ahead. But clearly, you want to stick towards the more value kind of names in that basket. I was looking at my screen yesterday during the carnage, and Snowflake was probably the most number one inbound that I got from my clients. And there was 3 stocks still in cloud software that were trading north of 40 times sales: Snowflake, Cloudflare, and Bill.com. And look what those stocks are doing today. Bill.com's down 23%, Cloudflare's down 17%, Snowflake's down another 6%. So there is just no appetite for these stocks, still trading at elevated valuations. And where it was 50 times sales kind of 4 or 5 months ago, now there's no appetite north of 15 times sales. It's just kind of amazing how quickly sentiment has shifted since the kind of, the Powell and the Fed took a different path in late Q4.
Right. Although, you mentioned some names that are familiar to those who follow Cathie Wood and ARK. Is there a good explanation why inflows have been so strong relative to the price action?
With Cathie, ARK, I give her credit for the cult following she's been able to build over the years. She obviously generated a lot of alpha from her kind of her earlier days, and then benefited mostly from COVID and the policy that followed. I think it's, I look at the headline yesterday, arguably is the scariest thing I saw all week and maybe all year, is that the ARK, saw the most inflows in a year back on Wednesday, right before obviously she crashed another 9% yesterday. That's sort of frightening. I don't know if there's some, funky hedging involved in that, but she has a following, and when she speaks, money tends to kind of pump into her portfolio right after. And I think it's just kind of, her performance speaks for itself. I think she's lagging the NASDAQ by 78% going back to January 1, 2021. And there's clearly just an utter lack of risk strategy and process to the type of name she's investing in. And there's just, again, no appetite for pretty much every name on her radar, maybe other than Tesla.
So, Joel, given the fact that we've seen this just incredibly intense 180-degree reversal in terms of sentiment for tech more broadly, you got the 10-year yield trading above 3% right now, 3.12%, new recent high as of this morning. You see yields continue to move higher here. Is there anything that changes that reversal we've seen in sentiment? Do we have further to fall, or are there actual specific names that are going to be able to weather higher interest rates no matter what they should just buy into right now?
Yeah, well, in terms of where the 10-year is going to go from here, clearly investors, especially the tech community, we need to see some more signs or not more signs, we need to see, evidence of peak inflation, and hopefully we can enter some sort of disinflationary phase to get a lot more comfortable owning these stocks. But right now, I think Powell did a good job on Wednesday, but I think the market's telling you there's still a lot of uncertainty out there, and he's trying to thread a needle in a period where growth is slowing, the consumer's slowing. We're seeing full-blown recessions in pockets of the market. Look at, on the e-commerce specifically. So within tech, I think look back a decade. We know that value has massively underperformed on a multi-year basis. And I still think that's a good place to be in the near term, as you'll probably see more mean reversion between the value growth. Again, go back to 2012 or whatever it may be. So whether that's, likes of IBM, which feels dirty as a tech guy saying that, but it's been working. Oracle continues to act okay, Cisco. So I think you want to be defensive, be nimble. Hopefully we get a pop into the CPI next week, but I think you have to take profits when they're there and not, try to overthink it or be too cute.